All right, everybody, what's going on? Welcome back to the channel. It's Millennial Trades. It's December 14th, 2022. Hopefully I don't look too washed out. What do you guys think? Do I look too washed out? I'm trying to get the settings right on my ring light. So I was looking at my last couple of videos and I was like, damn, I look washed out in those. It's actually better. The brighter the light is, it washes out all the wrinkles. But makes me look a little pasty. But you guys let me know what you think in the comment section down below. We've got some stuff to talk about. I'm going to try to just be matter of fact and go over all of this fairly quickly. Obviously, a volatile session. We were all expecting it. I was expecting a lot of volatility back and forth both ways, but probably down, and that's exactly what we got. We ended the day lower with the I believe all three indexes are lower. The big news, obviously, the Fed raised by 50 basis points. Now, I was expecting more than that. I was hopeful maybe that we'd get a 75 basis point rate hike, and that would really end the day lower. But that did not happen. We got the 50 basis point rate hike, and the market still didn't like it. I mean, you could see the price action as soon as that news came out. Moments before the news came out, the market started tanking and erased all of the gains of the day because it just kept going up and up and up. All these stocks were kind of going up, and then bam, they got annihilated. I was watching the futures, but I imagine most of the stocks had some similar price action. I mean, the moves on Amazon were incredible. You could have gotten rich today just trading Amazon, you know, if you could have had the stomach for some of this stuff and were able to anticipate it. You know, I scalped the markets this morning. I was in and out in about like 15 minutes, I think. It was a quick trade, a fairly stress-free trade as well, which are usually my best trades. A very small move that I caught to the downside this morning, and I was initially wrong about my entry. I started, you know, scaling in pretty much right at the open. It kind of went up a little bit. Amazon, you know, it went up, but it touched a supply zone. I was very confident that that supply zone would at least provide some movement temporarily at that point. So I put more contracts on, and it did move in my favor. We broke the opening low, so that was a pretty good indication that I should probably just take my profits, and I did. So I scalped the market. I'm up nearly $700. It was like, I think $689 is my total profit for the day. And it feels good because I'm up almost $2,000 on the week, and it's only Wednesday. You know, I could quit tomorrow for the week. You know, I could not trade Thursday and Friday and be fairly content, I suppose, or at least I should be. You know, but as a trader, you always want more. But I don't want to get into it, make this a whole vlog about my trading. But that was pretty much the deal. And, you know, I want to... I'm going to continue to share my trades on my shorts and my reels on Instagram. Some people like some of the other content, which is good. I'm still posting that too. But yeah, I think the trading videos will come. I'm going to put together some videos that maybe explain the strategy just a little bit more. I don't want people to copy my strategy, but my mission on this channel is to help you generate your own trading ideas. And I just want to kind of help people think outside the box a little bit, because I wish that I had found somebody maybe on YouTube 5, 6, 7 years ago that I could have generated some ideas from. So that's the only reason I'm really sharing that. Okay, so yeah, the rate hikes came in at 50 basis points. The CPI yesterday, right, came in a little bit better than expected. I mean, we're still at over 7% year-over-year rate, which is unacceptable. But this is supposed to be good news. We had the UK inflation that came out today, and they as well came in below forecasts. Now, they're up here above 10% still. They were at 11.1% in October, but in November, they came down to 10.7%. So it's only down a little bit from its 40-year high, the inflation rate in the UK. that doesn't sound like great news. If anything, I'm concerned. I'm not making a call here, but I'm concerned that this slowdown in inflation, or the rate of inflation, is simply just the pullback, and that we could, we could pop up again and break the, I don't know, maybe the 50-year inflation highs or the 100-year inflation. I mean, let's hope not. Let's hope not. I hope that doesn't happen. But if inflation is persistent, if it's entrenched, we may not have a choice, right? We may have to face something like that. Obviously, that's a little bit of doom and gloom, but some people are calling for this, right? Just as some people are calling for the dollar to completely collapse. I don't subscribe to that idea, but we'll see. We will see. The thing about inflation, right? You got to remember, when we get these inflation numbers, we also have to look deeper into it at the core inflation, and especially at food inflation, because that's really where inflation matters, is food, because we have to buy food. Inflation in the UK actually edged higher, even though their overall inflation rate started coming down, or slowing, I should say. Still over 10%, but slowing. Their food inflation numbers are absolutely incredible. I mean, 16.4% in October, and now it's 16.5% in November. So the price of food is going up in the UK, and you got to realize, I mean, the UK obviously doesn't have as many natural resources as most of the other superpowers. They don't have, they're relying on a lot of other countries for food. And this is probably one of the reasons for that extremely high inflation rate. But it's the same thing over here in the United States. I think our food, don't quote me on this, but I think our food inflation is over 10%, 100% for sure. You had Kramer making some comments here about inflation. He says everything is going well and that these numbers are remarkable. 7.1% is a remarkable inflation number. I mean, you can't make this stuff up. The thing with these guys, Kramer, any of these people on CNBC, they're wrong all the time. Most of the time they are wrong. I mean, remember the PayPal call from Kramer, right? And he had when PayPal started plummeting, he talked about how disappointed he was in their earnings, how disappointed he was in the company. And remember when he made the call about FTX calling Sam Bankman-Fried the next JP Morgan, the JP Morgan of crypto, I think was his exact quote. He called Fried the JP Morgan of crypto. Obviously had to walk that back as well. We will talk about Sam Bankman-Fried in a couple minutes, very briefly, but I wanted to mention that. Kramer also says that he expects food and energy prices to keep coming down, and for supply chains for home building and automakers to get better as well, which might help the prices. Is he right about this? I mean, let's hope Kramer is right. Let's hope this call that food and energy prices keep coming down for our CPIs and PPIs, and hopefully for other nations as well, which is probably not going to happen, especially if our dollar strengthens. If we can buy more with our dollar because our dollar is worth more compared to other currencies, that means we can buy more food than other countries can. So we have to remember that. And this is why the banks, JP Morgan, is sort of warning about the emerging markets potentially having issues, maybe even collapsing because of the dollar. Even though the dollar's had a couple of bad months, a really bad month in November. Its worst month, I think, in 12 years is what I read. But yeah, that being said, we also have more layoffs coming, right? With these interest rate hikes. This is the other thing to really try to grasp, is that as the interest rates rise, the cost of borrowing is more, for the companies too. So the corporations, the companies, the employers, they got to make cuts. They got to start laying people off. And we see this in several different sectors, especially in big tech right now, because there's a lot of people that are, getting paid basically just to sit online and censor people all day. And that's not very productive. And they're getting paid like $100,000 a year to do that. So they're getting fired. They're getting canned. And this might actually help stocks, right? unemployment goes up and companies are making cuts like this, well, that might be bullish for markets in a way. So just keep that in mind as well. But yeah, as the rate hikes continue, and as let's say they go to 5%, they're almost at 5%. I think they're at like 4.50 now, between 4.25 and 4.5, right? But let's say they go to 5%. Let's say they go to 6%, which I think Jim Bullard was calling for 7%. Let's say this happens, and for extended periods of time. You're going to see unemployment rise to 5%, maybe more than that. I mean, that's the goal. The Fed's goal is to get unemployment to 5%. So they want people to lose their jobs. That's the reality. They don't want people to lose their jobs, but they want unemployment of 5%. Now, a lot of the times they can say this kind of stuff to spook the market. Almost like it's just like a credible threat, right? The Fed can say, oh, we're going to raise rates by 7% so that, companies kind of react to that in a way as if they were actually going to do it, but they don't end up actually doing it. The Fed sort of front runs the market in this way all the time. I mean, this is one of their main key strategies dealing with the markets, because not only do they have to worry about their traditional, mission, which was price stability and maximum employment, whatever that means. That's kind of arbitrary too. But not only do they have to focus on those two objectives, now they got to focus on, how the markets are reacting to everything that they do, because, they're the central bank. So you've got rate hikes, quantitative tightening, basically sucking money out of the monetary supply, and balance sheet, like winding down the balance sheet. All of this stuff is, it's all related. And this is what the Fed is doing. Not just the Fed, but the European Central Bank as well talked about this because they have interest rate hikes coming. I think tomorrow they're going to release theirs. So we got Britain, the UK, America, or the US, and the European Central Bank, probably all going up 50 basis points, right? And that's part of the quantitative tightening. So when you hear that quantitative tightening, that's essentially what we're talking about. The interest rates, the cost of borrowing, sucking the monetary supply, like trying to bring down the inflation. Some people are calling for we're going into we're in disinflation right now, and then we're going to turn around and go into deflation, and that's going to be even harder to get through economically. The inflation, you could go down so many rabbit holes with this. It's mostly all just economic theory. It's econo-babble. There's really no science to any of this, which I kind of like because it's artistic too. You can sort of turn it into an art. It's almost like reading tea leaves or tarot cards or reading the stars. And I kind of like that about the markets. I like that about trading. I like that about... There's an intuitive aspect to this as well. But I get things wrong, I'll admit. Recently, I was expecting 75 basis points. I was thinking the Fed was capable of that, 5 times in a row, and it didn't happen. Right? I was also wrong about the metals. I thought metals would pull back, but they ended up breaking recent highs. So I get things wrong all the time, but that's why we shouldn't take any of this too seriously, even if it's coming from the news outlets. So yeah, the quantitative tightening obviously is going to cause risk aversion in the markets. So expect to see the markets continue downward. 20%, like Jamie Dimon said. It won't surprise me. It'll be shocking, but it won't be surprising. So let's talk about Sam Bankman-Fried real quick. All right. Philip Davis, the Prime Minister of the Bahamas, is basically eating crow a year after he talked about how legitimate FTX was and how bringing FTX and Sam Bankman-Fried to do business in the Bahamas legitimizes the securities regulators in the Bahamas. He's eating crow. And Sam Bankman-Fried is supposedly in jail right now. I mean, we saw some good video, okay? We saw a pretty good video that would indicate he's probably in jail, really in jail. Is he going to get extradited to the United States? Most of the talking heads I see interviewing these attorneys, the attorneys say that without a doubt, 100%, at some point in time, he's going to be extradited to a New York City facility. And so he's facing securities fraud, campaign violations as well, which I thought, that connects to some other stuff. I won't get into it now. And money laundering. Money laundering and securities fraud is, they're all serious. They're all serious. The exact quote from the Prime Minister, Philip Davis of the Bahamas, the exact quote was, he said, FTX's arrival in the Bahamas is an example of professionalism, the professionalism of Bahamian securities regulators in ensuring good actors come into the space. That was his quote. And he's eating crow. All these people are. Kevin O'Leary, poor Kevin O'Leary. I almost feel bad for Kevin O'Leary. I've seen videos of him crying, nearly crying, right? Because he's going through, I think he's going through a grief phase. He lost, $25 million in FTX. I don't mean to be laughing about it. I'm not laughing about it. And I'm not taking pleasure in Kevin O'Leary's, financial loss on that trade. But at first he's just kind of going through the stages of grief of losing that. And I did see an interview where he was kind of teary-eyed. You could hear it in his voice that he's like coming to accept the fact that this happened to him. Because, a month ago he was on MSNBC or CNBC talking about, my money is somewhere. I just got to find my money. And he's never going to find that, right? It went to the Democratic Party. He'll never see it again. Okay. There was also Tucker Carlson's theory. I saw him talking about this, how regulators are going to benefit from the collapse in FTX because it now gives regulators the chance, the opportunity, the reason, and the public, the public opinion behind them to start regulating the crypto, right? Because for the government, cryptocurrency is something that can't be controlled, is a threat to the government. So they've probably had their eyes on this for a long time. And some people are even claiming, I don't know if this is true, but some people are claiming that Sam Bankman-Fried is some sort of setup, a power play to bring down crypto so that regulators can step in and start control, governments can take control of the crypto space or blockchain technology, which could happen. What if blockchain technology, what if governments find a way to monopolize blockchain technology? Has anybody ever considered that? They probably have, and I need to go down that rabbit hole. So the last thing I'll really mention here that I thought was noteworthy is the TikTok news, a bipartisan bill sponsored by Marco Rubio to essentially ban TikTok, ban any social media platforms that are being run by China or Russia. That's what's in the bill. And you got to understand too, with TikTok, there's 100 million users that, if I'm not saying America 100% is going to ban it, but if they were, 100 million people, perhaps, maybe some of those are like from other countries. So let's say there's 50 million Americans on TikTok. That's going to be a lot of people affected, by a ban. And this is another reason I'm concerned about creating a platform, all right, or creating content on a app that could potentially be banned in the country that I live in, and I, would have harder access to. It just, I don't know if it makes sense, and it also doesn't make sense to build a platform on an app that's basically controlled by the Chinese Communist Party government. That doesn't make a lot of sense to me either, and I don't want to help them undermine America. Not that Instagram, in a way, Instagram undermines America too. Mark Zuckerberg, they're making choices that a lot of people would agree, like the censorship. Even Jack Dorsey came out and said the censorship of Donald Trump was the wrong thing to do for the internet and for society. I think we're getting closer to a point where free speech and safe technologies for Americans to use and express their opinions and, chat with each other and exchange ideas. I think America is waking up to the fact that this is fundamental. This is crucial to have platforms that are rooted in constitutional values. I do think that idea is spreading. So I hope that offers you guys a little bit of hope and maybe a little bit of optimism, right? We can end the news on a good note for once. With that, I'll pretty much leave it there. I will see you guys on the next video. Thank you so much for subscribing. Follow me on Instagram at Millennial Trades. And as always, until next time, I'll see you on the next video.